Next up, we have Capricorn Metals Chief Executive Officer Kim Massey. Kim is a chartered accountant with over 20 years' experience in the resources industry. Started as the CEO of Capricorn in September 19, after nearly a decade as CFO with Regis Resources. During his time at Regis, Kim was an integral part of the financing and development of the Duketon projects and brings a wealth of corporate, financial, markets and industry experience to the role of CEO of Capricorn. Welcome, Kim.
Thanks very much, Digby, and good morning, everyone. Thank you to the Diggers Selection Committee for the opportunity to present the Capricorn story for the first time at Diggers. For those of you that aren't familiar with Capricorn, we're an ASX-listed gold developer developing the Karlawinda project here in Western Australia. We think we've got a very exciting investment proposition, being one of very few Aussie gold developers out there. Just our usual disclaimers. I've been at Capricorn, as Digby said, for just on a year, joining Mark Clark, our Executive Chairman, and Paul Thomas, our COO, from Regis Resources. We've put together a very strong, experienced management team that's worked together for a number of years, not only at Regis, but also at another Australian gold producer, Equigold, and some go as far back as Samantha Gold with Nick Georgetta in the early 90s. Over that journey, we've built and run several open pit CIL projects very similar to Karlawinda, building a reputation for delivering strong shareholder returns, both in terms of capital growth and dividends. For example, during our time at Regis, we raised a total of $50 million in equity to fund the development of our first project, Moolart Well, and then over the next nearly 10 years that we were there, paid over $350 million in dividends and increased the production base from 100,000 ounces to 350,000 ounces where it sits today. We see Karlawinda as a vehicle to continue that story. It's a long life, high margin project. On current reserve base of 1.2 million ounces, we've got more than 10 years of mine life. Project's fully funded. We're on track to commence commissioning in March next year, with first gold expected to be poured in the June quarter. We're developing this like all the other projects we've been involved in with an in-house development team led by Joe Bosso and Bob Willems, and between them, these two guys have built and maintained over 30 CIL plants within Australia and overseas. The way we build our projects is we outsource the pure engineering work to a third party. In this case, that's Mintrex, a local Perth engineering firm. And then we have all the subcontractors report directly to us as principal. So it gives us great control and flexibility over timing and cost. We're obviously operating in a fantastic part of the world here in WA. It's arguably the best mining jurisdiction in the world, and when you consider that we can have these sort of events, it's hard to argue against that. Apart from some minor delays with equipment supplies coming in from overseas, we haven't been too affected by the impact of Corona. Our construction schedule remains pretty much on track and should, as I said before, be commissioning in March 21. We're really excited as well about the exploration potential we've got out at Karlawinda. We've got a large tenement package with a number of prospective greenstone belts running across it that have hardly been drilled for gold. So we're really excited to get out there, and given our past experience of being able to grow our resource base, once we've got a mill turning in the district, we're confident that we can add further value through exploration. If we can deliver over the next 12 months, bring Karlawinda into production and start to generate the significant cash flows we know the project's capable of achieving, then we think we've got the opportunity to start to attract the same sort of premium valuations that we see other Aussie gold producers currently enjoy. Here's a quick corporate snapshot of the company. At today's share price, we're capped at around 625 million. We've got plenty of cash in the bank at the moment, $49 million at the end of September, as well as a $100 million financing facility with Macquarie Bank. We've had really strong Aussie insto support over the last 12 months. We're happy to count Paradise and Ely Griffiths as substantial holders, as well as long-time holder Hawke's Point out of New York and London with just under 10%. The board and management team also have a significant stake in the company with over 10%. And importantly, we haven't seen any significant gold ETF buying on our register yet, which you would expect to change once we're up and operating and starting to generate revenue. So turning to the project, as I said before, we're located here in WA. We're 60 kilometres southeast of Newman in the Pilbara. And although better known for its iron ore than as a gold mining district, obviously Newman's very well set up for mining, being a hub for BHP's iron ore operations. And so as a result, very well catered for in terms of mining and engineering services out of town. We've also got fantastic access to infrastructure. We've got the Great Northern Highway that's around 44 kilometres west of site, provides fantastic access, runs all the way down to Perth. We've also got the Goldfields gas pipeline, 60 kilometres west of site, giving us access to cheap gas for power generation. So in terms of location, you couldn't ask for a better place to build and to operate a mine. Karlawinda's currently got 2.1 million ounces of resources, 1.2 million of that sit in open pit, predominantly at the Bibra deposit. Our current production target is between 105 and 120,000 ounces per annum, but with the planned modifications we're doing to the plant design, we expect to fall at the top end of that targeted range at all-in sustaining costs of between $1,140 and $1,190 per ounce. It's a large open pit with low strip ratio, simple CIL processing, utilising three-stage crushing, feeding a large single bore mill. Although our current life of mine is currently well over 10 years, based on current reserves, we think we've got tremendous potential to increase mine life. I'll touch on it a bit later, but certainly the geometry of the ore body is very amenable to cutbacks, and there's a significant amount of resources that sit down dip of our current reserve. So we'll look to do that and extend mine life in the future. As I said, the project's fully funded, over $49 million in the bank, and the Macquarie facility, which is an $80 million debt facility, which is currently undrawn, and a $20 million guarantee facility, which we'll use to fund the development of the gas lateral pipeline with APA. As part of the facility, we've done 200,000 ounces of hedging, achieving a flat forward price of $22.50 per ounce, and we'll look to deliver into that hedging over the term of the loan, which is 4 years. So around 50,000 ounces of our production over the first 4 years will go into that, 10 to 12,000 ounces a quarter. But obviously, if we pay back the loan earlier, then the hedging becomes a lot more flexible. In July this year, we did a placement, raised $32 million, and that was on the back of our final plant design process, identifying that by modifying and upscaling some of the ancillary equipment, such as screens and conveyors, then our crushing and grinding circuit had the capacity to do a lot more throughput. And with the modifications we've made, we're confident that the mill will now do between 4.5 and 5 million tonnes per annum over the first 3 years using an oxide fresh ore blend. And then from year 4 onwards, we'll be doing 4 to 4.5 million tonnes per annum using just solely fresh rock feed. We've also allowed for additional leaching capacity by pouring 2 extra ring beams for leaching tanks. At the moment, we'll look to put those tanks in once we're up and running if we decide we need more residency time because of the additional throughput. So that's something we'll do once we're up and running. We're also looking at putting an on-site airstrip in. It was always our intention to put one in, but we were going to wait until we were up and running and starting to generate revenue before we did that. But given the operational efficiencies of having an on-site airstrip that you get by minimising contractor downtime and obviously the safety benefits of minimising travel time, we thought it was prudent to put that in sooner rather than later. Having the extra money in the bank as well will mean that we can get more aggressive on the exploration front. Again, we're going to wait until we're up and running to really push hard on that. But given the potential of our ground, we're really excited to get in there and start exploring as soon as possible. And then finally, having the additional funding should mean that we can draw down less on the Macquarie facility and pay that back sooner. In terms of development, we started construction out at Karlawinda in January this year. Our priority was to install the accommodation village. You can see there from that photo that we've got a 306-room accommodation village which is now operational and housing our construction workforce. We've also put in the site access road 44 kilometres out to the Great Northern Highway, which gives us much better access, makes it a lot easier to bring equipment and people in and off site. All the processing equipment's been ordered, some of the gear's starting to arrive on site now. We've executed a lot of the key project contracts, including the gas transport agreement with APA, power supply with Contract Power, and the mining agreement with Mining and Civil Australia. The CIL tanks, they're erected, the structural steel is starting to go on that. We've made significant progress on the concreting. The civil earthworks are progressing really well. We've ordered all the piping for the gas lateral pipeline, and that's now in transit from South Korea and should arrive by the end of the month. We've also started to grade control well in advance of mining. We have completed stage 1 of the open pit for grade control, and we'll look to do the rest of the laterites over the next couple of months. A lot of the pre-mining work has been done, including clearing the TSF. We've got access to the clay pit there now, which will provide material to build the TSF. Macquarie have also started to mobilise some of their equipment to site with the expectation that we'll be able to begin ahead of schedule. So we were scheduled to start mining in January. We'll probably bring that forward a couple of months, which will be good. There's some pictures there that probably give you a bit better idea of the progress we're making. As you can see, the process plant's starting to take shape, the tanks are up, the top of tank steelwork's going on, a lot of the concrete's been poured, especially the foundations for the mill and the crushing circuit. TSF's cleared, and some of the equipment like the jaw crusher there arrived a couple of weeks ago, so that equipment will start to dribble in over the next few months. In April, we came out with an updated reserve and resource for the project. The updated reserve's 43.5 million tonnes at 0.9 grams per tonne for just over 1.2 million ounces. The resource currently 86.7 million tonnes at 0.8 grams per tonne for just over 2.1 million ounces. The updated reserve was a 35% increase on the previous estimate, which was a result of infill drill programs bringing more ounces into reserve at Bibra and Southern Corridor deposit. As well as that, our updated reserve estimate allowed for broader geological domaining, which included bringing in more lower grade material, but now means we've got a block model much better suited to bulk mining with large scale equipment in the open pit. As a result, mine life's increased, as I said, well over 10 years, and strip ratios come down from 4.8 to 3.6. We've used a conservative $1,600 an ounce gold price for the reserve and $2,000 an ounce for the resource. So considering where current gold price sits at well above 2,600, we certainly think there's inherent scope for mine life and reserve extension. When you look at a cross-section of the deposit, you can see that, well, we think the growth will come from within the pit. The gold itself is hosted in a sandstone unit, sits on top of a barren volcanoclastic sandstone. Geometry of the ore body, you can see it dips at a very gentle 22 degrees, which gives it the reserve a relatively shallow vertical depth down to 250 metres. And you can see in the pink outline there the current pit design. The resource extends down to 312 metres. We know mineralisation continues at depth. We've drilled a deep exploratory hole down to 600 metres vertical depth, and we're seeing the same sort of mineralisation as we do closer to surface. So it's a very consistent ore body. Given the favourable geometry of the ore body then, and we've got a significant amount of ounces that sit between the current pit design and the resource shell. There's 937,000 ounces of resource that's currently not in the pit design, or in the reserve, I should say. So we can look at doing cutbacks to access those resources in the future. At the moment, we're concentrating on development. We'll look to do those cutbacks and bring those into the mine plan once we're up and running. There's no great urgency for that at the moment, given our mine life's well over 10 years. And one last thing I'll just say on that as well, given the resource is done at $2,000, $700 below spot, and the reserves at nearly $1,000 below spot, then there's certainly looks promising for mine life extension there. Here's the processing flow sheet. You can see it's a 3-stage crushing circuit feeding a single ball mill. It's a very robust design, one that we're most familiar with. We think it reduces our operating risk, gives us flexibility, and the best opportunity to maximise our throughput. And as I said, we think that this circuit will do 4.5 to 5 million tonnes in the first 3 years, and then from year 4 onwards, 4 to 4.5 million tonnes per annum when we're feeding just fresh rock. As I said before, we're also very lucky to be able to tap into the Goldfields gas pipeline for cheap gas. It offers significant savings over diesel. If we were to use diesel here, our power costs would be somewhere in the range of 25 to 26 cents a kilowatt hour. Being able to use gas for power generation, we're looking at costs of around 14 to 16 cents a kilowatt hour, so some significant savings from that. When we first got involved with the project, we did a thorough review of the metallurgical test work that had been done, and there had been a significant amount of work done on it. And we were able to rely on it. It indicated that we've got a very clean ore body. We get high recoveries, around 92% on a coarse grind, gravity of around 45%, and low reagent consumption, so all very pleasing from that point of view. Turning to exploration now, and we're really excited about the potential of our tenement package. Looking at the geology, and I think it's important to understand the geology of the region we're operating in. We sit in what's called the Sylvania Dome. It's part of the much larger Pilbara Craton, and that's made up of Archean-aged rocks, which is the type you're most associated with gold occurrences here in WA. As we know, it's much more known for its iron ore, this district, and that comes from the southern portion of the Pilbara Craton, which is overlaid by the younger Hamersley Basin. We sit just to the south of that, and as a result, most of exploration has been focused more on your iron ore, obviously, with very little work done for gold in the region. But we think, given the discovery of gold at Karlawinda, then it opens up the potential for more gold discoveries in the region. Focusing on our land holding, as I said, we've got a large tenement package there, over 2,000 square kilometres of ground, with a lot of greenstone, prospective greenstone running over it. We've done a significant amount of drilling on our ground, 267,000 metres worth, but when you look at that map, you can see the majority, or over 97% of that drilling, has all been within 4 kilometres of the Bibra deposit. There's been very little drilling done outside of Bibra, so it is a bit of an unknown from a geological perspective for us. So much so that it was only in 2018 that the team identified the Mundawindi greenstone, which sits, you can see, just to the east of Bibra. That was previously mapped as granites, and it was only when our team was walking it and mapping it themselves that they identified it as a greenstone. So it's had no drilling done on it at all. We're very keen to get in there and drill that, and we'll get there as soon as we can once we've got the land clearance there. I guess what we're hoping to do out at Karlawinda is to replicate our past experience of being able to expand our resource base once we've got a processing plant in the area. We know, based on past experience at Duketon, that the hurdle for exploration success becomes a lot lower once you've got a mill turning, and any exploration success you do have generally adds significant value to the company. So with that in mind, we've come out with a three-pronged exploration strategy. The first part of that is to drill out our resources and convert them into the mine plan. We're very successful this year in doing that and increasing our reserve significantly in April this year. We've put that process on hold at the moment whilst we focus on development, but again, we'll get back in there once we're up and operating. Secondly, we're looking to kickstart our near mine drilling, looking to find BIB repeats near the processing plant. We say it in the presentation, it's fairly obvious that the best place to find new resources is near the processing plant. So we certainly have got started there, and I'll touch on that shortly, but it'll be a real focus for us. And finally, on a greenfields exploration front, looking across the broader tenement package. As I said, we don't have a lot of geological understanding of the broader tenement package, so we're looking to do first-pass exploration work, including soil geochemistry and geophysics. So as part of that near mine exploration strategy, we've commenced an air core drilling program on a number of targets identified, all within 15 kilometres of the processing plant. We're drilling across 8 targets that we identified from the existing database. They're on geochemical anomalies that have had little to no historic drilling done on them in the past, but they're coincidental to major fault structures and geological contacts. It's a 2-phase program of around 20,000 metres. We're currently drilling the red lines there. We're starting to get samples to the lab and starting to get results dribble in, but hopefully get the bulk of those results over the next few weeks. We'll start phase 2, those lines in blue there, once those areas are cleared for heritage, which should be shortly. Hope that's not mine. And as I said before, across the broader tenement package, just to build up our geological understanding of the region, we've completed soil sampling programs across those areas that you can see in a hatched outline there on the map. We've also commenced a detailed aeromagnetic survey of our entire tenement package, and so that'll get us down to 50-metre line spacing. We'll collate all that information together and hopefully from there generate some interesting targets to go and test. So we certainly believe we've got the platform to grow a substantial gold company. When you look at Karlawinda there, and it compares very favourably to a lot of other Aussie gold projects, both in terms of mine life and in terms of all-in sustaining cost margin. At current gold price of $2,600, we've got all-in sustaining cost margins of well over $1,400 an ounce, which we think is world class. And it's worth bearing in mind that outside of all-in sustaining costs and exploration spend, which will be around $5 million a year, is cheap exploration work, and some modest corporate overheads, there is no other expenditure that we'll be committed to. We don't have the same growth capital costs you're seeing that a lot more mature projects are needing to be spent on just to sustain them. So as a result, we should be generating significant cash flow, which once we're up and running, that should translate directly into cash build on our balance sheet. That'll compare very favourably, we think, with a lot of larger Aussie gold companies out there. So I suppose if we can deliver on that over the next 6 to 12 months, bring Karlawinda into production, generate those significant cash flows we talked of, then we expect that we'll attract the same sort of valuations our Aussie gold peers currently are enjoying and start to move up that graph. So really then, I guess to sum up, we're really excited by Capricorn. We've got a really exciting project in Karlawinda. It's a long life, high margin project, comes with low technical risk. We've got a fantastic experienced management team that have done it before very successfully. Our development's fully funded, we're well underway, and we're making really good progress on the development, and we should be up and commissioning in March next year with first gold in the June 21 quarter. We're operating in a fantastic part of the world here in WA, comes with low risk, hasn't really affected our development timetable. We think we've got fantastic upside for growth, both from within the deposit, but also from the significant exploration opportunity we've got on our pretty much underexplored tenement package. And if we can deliver over the next few months, then we should be able to grow a very substantial gold company. So thanks once again. Thank you to Miles and Sharon and Suzanne and the Diggers team for the opportunity to speak.
We're running right up against the time there, Kim, so we'll leave it there. Thank you very much.